All right, let's talk NIO. You've heard the name, you've seen the headlines, but what's really going on with one of the biggest names in the EV game? Today, we're going to tear down their latest financial performance, get into their market strategy, and really figure out what this all means if you're an investor. So let's get right into it. So check this out. Right from the jump, this is the key takeaway. You've got this idea that for anyone thinking long-term, NIO is a seriously compelling play, even with all the crazy market swings we're seeing. It basically says, yeah, it's going to be a bumpy ride, but the destination could be worth it. So the big question is, what's behind that confidence? What are the numbers that back up a claim like that?
Okay, so first up, performance by the numbers. This is the what. We're digging into the hard data that supports that whole compelling opportunity idea. Let's see if the numbers really do tell the story.
And wow, here we go. Look at this top-line number. For Q4, NIO pulled in over $1.7 billion in revenue. That's a 25% jump from the year before, and it blew past what the analysts were expecting. You know, in a space as cutthroat as the EV market, seeing that kind of revenue growth is exactly what you want. It's pretty much the number one sign that the business is healthy and, more importantly, that it's growing. And hey, that revenue isn't just some number on a spreadsheet. It's tied directly to cars hitting the road. They delivered over 55,000 vehicles in the last quarter, crushing their own guidance of 52,000. Now, what does that tell us? Well, two things, really. One, people want their cars. The demand is there. And two, they're actually getting them built and out the door. That means their production is running smoothly, which is a huge deal. But here's the thing, right? These numbers are great, but you have to look at who they're up against. And this is where it gets interesting. NIO isn't trying to be everything to everyone. You've got these absolute giants, Tesla and BYD, fighting it out for the whole market. But NIO, they're playing a different game. They've smartly carved out this premium niche for themselves, mostly in China. It's like they're not trying to win the whole war, just the most profitable battle. It's a focused strategy, and it seems to be working.
So we've seen the what, the impressive numbers. Now let's unpack the how. How are they actually doing it? What's the secret sauce that's driving all this?
It really boils down to these four key strengths. First, you've got their battery swap tech, which is, their big claim to fame. We'll get more into that. Then, they're not just a China story anymore. They're pushing into Europe. Third, they've built this really strong premium brand. People see a NIO and they know it's a high-end vehicle. And finally, they're not sleeping on the future. They're pouring money into autonomous driving. It's not just one thing, it's this whole package. Okay, of all those points, there's one that is just a total game changer. We have to zoom in on this one. Let's talk about their technology secret weapon, battery as a service. So what the heck is BaaS? Think about it this way. When you buy a NIO, you can choose to buy it without the battery. I know, it sounds weird, but it makes the car way cheaper upfront. Then you just pay a monthly subscription, kind of like for your phone. And that gives you access to their network of battery swap stations. You never have to worry about your battery getting old, and you always have a full charge ready to go. It completely flips the script on how you own an electric car. And this isn't just some gimmick. It's a real-world solution. They're building these swap stations all over the place. So instead of waiting around for 30, 40 minutes to an hour for a fast charge, you just pull in. An automated system swaps your dead battery for a full one in 3 minutes. And boom, you're gone. It totally gets rid of range anxiety and the whole headache of charging. That convenience factor, that's a huge, huge advantage. Nobody else really has at this scale. Okay, so we've got strong financials, a smart strategy, and this killer tech advantage. Let's pull it all together now and look at the long-term picture. What does it all mean? So if you're looking at this as an investor, what's the time frame? Well, the consensus here is that you need to be thinking 3 to 5 years out. This is not a get-rich-quick stock. The idea is that it's going to take time for all these advantages, the battery tech, the European expansion, to really mature and show up in the stock price. It's about planting a seed and waiting for the tree to grow. Which leads us to the one big question that everything boils down to. NIO's tech is amazing, their strategy is smart, but the global EV race is just an absolute brawl. So is that battery swapping advantage truly enough for them to win in the long run? That's the multi-billion-dollar question, and it's something every single person looking at this stock needs to think about.